In business today, three things to know. First, as Janet Yellen prepares to move into Ben Bernanke's office, she says there's more work to do in cleaning up a messy economy. We'll have her comments in front of lawmakers today. Then, we fumbled. The president's words on the health care rollout. In a rapid response to growing anger, the president announces that millions of people who have had their insurance plans canceled may now be allowed to keep them. And the who's who of fugitive white-collar criminals, how they get away with some of the biggest scams, and how the government hunts them down. We'll speak with a man who spent 2 years in the federal pen. A Rise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. Another day, another record. This time, stocks propelled by the dovish testimony of likely Fed Chair Janet Yellen. Yellen in front of lawmakers today who will vote on her confirmation to replace Ben Bernanke. Yellen basically said the Fed's money policy of buying $85 billion of bonds each month will continue until employment improves. We'll have more on that in a few minutes. Yellen's comments come as jobless numbers continue to prove challenging. The weekly numbers are always volatile. That's what we got today. And this week showed more Americans than expected filed for unemployment benefits. All in all, that led the Dow and the S&P 500 to new record highs. Utilities performing best, technology down. Let's take a look at the markets. The Dow up 54.59 to 15,876. The S&P 500 up 8 to 1790.62. The NASDAQ up 7 to 39.72, closing in on that 4,000 mark. Stocks to watch today, Cisco dropping more than 11% after it warned on earnings news, down 21.40. Brent USA up 57 cents to 42.71, and Walmart up 19 cents to 79.08. Commodities, gold up and oil down to 93.82. The woman who is likely to be the next chair of the U.S. Federal Reserve faced tough questions on the first day of her Senate confirmation hearing. Janet Yellen testifying in front of a Senate committee today that there remains a fair amount of work to be done to get the economy on the right path. Yellen is expected to continue the easy money policies of current Chairman Ben Bernanke in an effort to bring unemployment down.
We know that those long spells of unemployment are particularly painful for households, impose great hardship and costs on those without work, on the marriages of those who suffer these long unemployment spells, on their families. So I consider it imperative that we do what we can to promote a very strong recovery.
But she did throw a bone of sorts to the hawks. She answered concerns that the $85 billion a month bond buying program has gone on too long.
I would agree that this program cannot continue forever, that there are costs and risks associated with the program. We're monitoring those very carefully.
Zane Brown is a partner with Lord Abbott and has been watching the Fed developments closely. Zane, welcome back to Exchange.
Good to be here. Thank you.
Anything that Janet said today that surprised you?
Nope. I think she struck the right balance. She did exactly what she wanted to do and exactly what the markets wanted too. She calmed the markets down, but at the same time wasn't super dovish. And she did, as you suggest, throw a bone to the hawks and say, hey, we're concerned too. So just the perfect balance.
Was that a little bit of a surprise that she came out a little bit hawkish here? It's something Republicans certainly wanted to hear, that this process isn't going to go on forever.
No, actually, I think a lot of us thought that she might come even more hawkish, come across more hawkish than what she did, just to balance it a little bit more and maybe appeal to the hawks, because she has the Democrat votes. She might want one or two Republican votes as well. But all in all, a very balanced approach and really what the markets wanted.
Speaking of votes, is there anything that could, sort of hang up her nomination at this point?
Probably not hang up her nomination, but I think the expectation is she is going to be very dovish, and it's going to all unfold nice and neat over the next year. But the composition of the FOMC coming up could be a little bit more hawkish than what it has been in the past. She'll have to deal with it, and markets will have to deal with volatility.
I want to talk about that in a moment, and the volatility that could come from that. There are some economists that we have come on this show saying the Fed, this is all a head fake, because the Fed will never end the stimulus plan because it's panicked about what will happen to the markets.
Well, I think they have to end the $85 billion quantitative easing, because if they don't, come June, if they haven't done anything, a lot of the bond market vigilantes will say, if you don't end this, we're going to get inflation, and then interest rates will rise, and she will be faced with a conundrum. Interest rates are rising if she does nothing. Interest rates will rise if she does go ahead with tapering.
That's right. And there's a concern of a deflationary risk if this goes on too long.
Yes.
Do you fall into that camp?
Well, I'm not quite sure I believe that she will allow that to go on too long, but yes, that is another concern that people would have if she continues to purchase $85 billion, and pretty soon there are no other buyers for long-term government debt.
Eventually, you can only sell so much of this, right? And there's concern that at some point the currency is going to get hammered. That hasn't happened yet. I mean, the dollar is certainly weaker, but it's still worth something.
Yes, and I think that the Congress also aggravates that somewhat.
That's true.
And in December and January, if we end up with the drama all over again, you can expect, an aggravated weakness to the currency in that environment as well.
So you mentioned the other Fed governors, which is something most people don't realize, that there is more than one person who makes these decisions. And sometimes they go off the reservation a little bit and make their own comments, and some of them have been more hawkish. And there are going to be some changes coming up. What kind of pressure could she feel? And does the Fed chairman ever get overruled?
Well, the Fed chairman will rarely get overruled, but there will be the perception of internal discontent, especially when you have two of the most hawkish Fed presidents joining her board, joining the FOMC in January, Plosser and Fisher, and both of them are very vocal about how we should start ending quantitative easing today. And so I think that internal conflict could create volatility. She won't lose control, but it won't appear to be as cohesive and uniform Fed policy as she would like.
And boy, the market's certainly not going to like that. Real quickly here, when do you think tapering is going to start?
I think it could start as soon as January, but I think she will delay until March.
Okay, Zane, thank you. We're going to have you back on and soon to talk about bonds.
Great.
Thanks,
Thank you.
Zane, for coming in. Facing angry Americans who have had their health care plans canceled and political pressure from fellow Democrats, President Obama today relented and announced a plan that will allow health insurance companies to renew plans that they had previously canceled. The plans were canceled because they fall short of coverage mandated under the Affordable Care Act. The president instituted what's called an administrative fix. That, folks, is an edict that effectively alters the law. The decision by Mr. Obama comes as Democrats threatened an all-out open revolt, even drawing up plans in Congress to reverse part of the health care law. Before the law went into effect, the president repeatedly said, quote, if you like your plan, you can keep your plan, a promise that did not prove true for several million people who received cancellation notices. He has since apologized. It's unclear, however, the total impact of this decision. To help sort through today's developments is Hadley Heath, a senior policy analyst from Independent Women's Forum, a group that has been critical of Obamacare in the past. Good afternoon, Hadley. Thank you for coming on Arise Exchange.
Thank you for having me.
Let me just talk from a practical standpoint. We know where you kind of fall on the overall issue, but will this fix resolve the issue of cancellations?
Even the president himself in his remarks today said that now this falls to state-level insurance commissioners and the insurance companies themselves. The practical question is, realistically, can insurance companies and will insurance companies have enough time in the next 50 days to sort out what happens January 1st with these plans?
Boy, this is going to be confusing. So you get a cancellation notice, and now you're going to get another notice saying, never mind?
Well, it's possible, but clearly the goal of the White House with the president's remarks today was to shift blame away from the Affordable Care Act and make it clear that the federal government, at least, will allow these plans to continue to be offered. But this is a very difficult position for insurers, given that for the past 3.5 years or so, they've been preparing for this moment to actually cancel those plans.
Do you think the president did this because he knew that there is a broken part of the law here that he wants to fix? Or do you think that it just became too politically inconvenient for him to continue, especially when you have someone like California Senator Dianne Feinstein, who has no challengers coming out so vocally opposed to what's been going on?
Well, I certainly think the fracturing among Democrats in this issue was something the president wanted to get ahead of. We saw in the Senate an effort led by Senator Landrieu to offer legislation that would go even further than the president's fix to this problem and mandate that insurance companies continue to offer those canceled plans. So certainly he's trying to be a leader and unite Democrats in a way that they don't have to take a vote on this issue, because it's a very difficult issue. Practically, according to the policy, if you allow these plans to continue to be offered, this could take away from the pools of of insurance companies that are trying to operate in the exchanges or trying to offer ACA compliant plans. So certainly there's a policy issue with continuing to offer these plans, but there's also the political issue of the president's broken promise. He's trying to correct that now.
Hallie, let me ask you something. You come from a relatively conservative group, but is it possible that it's going to be the Democrats who are going to lead us out of this and make this act actually better? Because the Republicans probably don't want to help the president.
Well, that seems to be the political standstill. Republicans don't want to do anything to fix Obamacare, and it's unclear whether or not Democrats can. Of course, before President Obama was elected, there was a lot of disagreement among people on the left about whether to use an Obamacare approach, one with a mandate forcing people to buy insurance, or to go directly to a single-payer system. I would not be surprised to see Democrats proposing that we go as far as socialized medicine in the next steps. But you will also see Republicans, I believe, try to take some leadership and propose alternative health reform plans as Americans continue to be disillusioned with Obamacare.
Okay, Hadley Heath from the Independent Women's Forum, thank you so much.
Thank you.
All right. Coming up, Africa has some of the fastest growing economies. How to invest in the African future. You're watching Arise Exchange. Welcome back to Arise Exchange for this Thursday. Time now for other business headlines of the day. Boeing workers have voted down a labor deal that could mean Washington state loses the $3 billion 777X airplane. The machinists union, representing 31,000 workers, rejected an offer from Boeing for an 8-year contract extension that would have cut wages and some pension benefits, but it would have secured the building of the new jetliner in Washington. The vote, which took place on Wednesday, might mean Boeing is going to consider moving production elsewhere. Alternative locations include South Carolina, Long Beach, California, and Salt Lake City. The city of Detroit has reached its first union deal since it filed for bankruptcy. The financially strapped city able to reach a 5-year agreement with the union representing Detroit's emergency medical technicians, but it still must be approved by the state. The city has made an offer to all the public service unions to try to reach new labor deals. Volkswagen recalling more than 2.5 million vehicles worldwide. The recall covers different issues in some of its most popular models, including 800,000 Tiguan compact sport utility vehicles that may have lighting defects, and another 239,000 Amarok pickups, which need to be fixed for fuel leaks. Some major retailers posting earnings today. Walmart issued less than bald profits with a 2.8% rise from a year ago. Net income grew during the third quarter, coming in at $3.7 billion on revenue of $115.7 billion. Kohl's also fell short of profit and revenue projections. The department store chain reported lower than expected quarterly results with an 18% drop in profits on lower sales. However, if you'll recall, Macy's reported higher than expected quarterly sales yesterday. We'll see if that's a standalone issue, though. The average 401k balance, if you've been checking it, rose to a new high. The market's been on fire. That's what's going to happen. According to Fidelity Investments, the nation's largest 401k provider, the average balance jumped 11% higher in the third quarter from a year ago, and almost 20% for those participating in the same plan for at least 10 years. JP Morgan Chase is discovering when you give people a social media forum to make comments, sometimes you don't get the comments you hope for. The bank canceled a planned question and answer session on Twitter yesterday after receiving thousands of angry tweets. It comes as the bank is looking at a $13 billion settlement with the government over mortgage crises. Many used the pound ask JPM to vent their subjects on the feeling. One tweet asked, "Why do you think it's okay to outright lie, cheat, and steal?" While another asked, Anyone in your family ever foreclosed on? Well, less than 6 hours after its original post, the company said on their official Twitter page, tomorrow's Q&A canceled. Bad idea. Back to the drawing board. If you can't take it. Africa has become a hotspot for foreign investors because of its vast population and natural resources. Retail in particular is booming, with supermarkets and mega shopping centers popping up in the sub-Saharan African area. African investments advisor Ashley Bendo says the trend will only continue as the technology and infrastructures continue to boom. Ashley, welcome to Arise Exchange.
Thanks very much for having me.
Okay, so we're going to talk in broad terms about Africa, and we're going to have an ongoing segment focusing on investment opportunities. I have heard people say that Africa is the China for the 21st century. Is it? Are we going to see dramatic growth?
I think so. I think a lot of major and senior economists would suggest that, and strategists involved in emerging markets. We've seen India, we've seen China. I think Africa is certainly the next growth story over the next generation, over the next few generations.
What is leading this growth in Africa? And we should remind people that it's a multitude of countries, different cultures, different resources, but what's leading the growth there?
Absolutely. Well, look, a lot of people focus on the resources, the oil and gas, and I think that's certainly helping. There's a great demand from the rest of the world now for that, and China's mentioned quite a lot. But what we're seeing is...
And China's in there pumping a lot of money in there. In fact, the president here was criticized for sort of following the lead because China's been kind of a little bit out front.
Absolutely, but Obama was on the continent not so long ago, a couple of months back. He visited 3 countries, and he's now set up a plan called Power Africa, where he's going to help many US institutions and global institutions invest in infrastructure build-out across the continent, which is fantastic. Yes, perhaps slightly behind the rest of the world, but he's now putting plans into place with regards to that.
Yeah, well, you can't really have an investment strategy and growth without electricity, and that continues to be a challenge in Africa, right?
Absolutely. We need a lot of investment into the infrastructure, into the power sectors. But we're seeing developments. At this point, as we speak, the power reforms in Nigeria are coming towards the latter stages of being handed out to local and international partners. So we should see power plants being built in scale over the next few years now, which is a great start. And we're starting to see that trend.
Just started to see that, and there's some investment opportunities there, I imagine, in the companies and industries that are going to be providing that.
Absolutely.
Where do you see the opportunities in general in Africa beyond just the mining areas and the commodities and oil? Where else are there opportunities for substantial growth?
Well, I think you can look at this publicly, you can look at it privately. I think you look at it by countries, and I think the countries which often come onto people's radars are the largest countries with regards to their demographics. The Nigerias, the Kenyas,
South Africa.
Well, South Africa, clearly very developed, and a lot of their companies, you mentioned consumer and retail, ShopRites of the world are starting to expand into not just southern, but the rest of sub-Saharan Africa.
And people may not realize it, but Nigeria is on track to become the largest economy in Africa. So,
in the not too distant future.
Are there any areas that people might not think of investing, but that come to mind, other countries that you like?
Well, the country, if you look at West Africa, the Ivory Coast, under their new government, are certainly moving forward now. We have Ghana with their oil find recently. Nigeria, 160, 170 million people. Kenya, the East African community are now talking with regards to trading partnerships and the like, and obviously South Africa around Southern Africa around South Africa. Infrastructure, cement, real estate, some of the largest multinational beer companies are all over the continent now. Telecommunications, about 30% penetration of subscribers within the overall population of about 1 billion people.
Can people follow the industries that did well, for example, in China, and kind of copy that a little bit in a sort of emerging market concept that they're going to need the same services?
Absolutely. I think the emerging market sectors that have performed well around the rest of the world and within the BRIC markets will do well in Africa.
Okay, you can't talk about Africa without talking about political risk, though, and corruption. So how are the countries addressing that, and are they doing a good enough job in your mind to really start putting investment dollars there?
Yeah, I think over the last decade or so, we've seen a number of democratic elections, which we didn't see necessarily in the 90s. Countries are moving forward. We're now seeing second or third presidents. The number of presidents that have been in power for a few decades is certainly reduced quite dramatically. And these countries are putting the checks in place and moving forward, I would say quite rapidly in the case of a number of countries. Yes, there are a few which still provide quite severe political risk. Somalia, for example. But the majority are moving forward and really working hard
In
that case.
In the few seconds we have left, can retail investors here invest in Africa?
Yes, they can. They can invest in London-listed, Toronto-listed, Australian, UK, US-listed companies. They can invest in a few ETFs as well that give exposure.
Okay, Ashley Bandel, thank you so much.
It's my pleasure. Thank you.
Ahead, an app that basically allows you to send pictures of your private parts and get away with it. And a $3 billion offer for that app, that was rejected. Our favorite person of the day is next. You're watching Arise Exchange. Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, that person is someone who turned down $3 billion, that's B billions, for his company because it wasn't enough money.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Well, certainly 23-year-old Evan Spiegel hopes so. He founded the app Snapshot and was offered the tidy sum in cash by Facebook. Even though Snapshot has no revenue, doesn't even have a business. It's only an app that allows people to send text messages that are then erased after 10 seconds, solving that sticky problem of embarrassing text messages that live forever online and can be discovered. In fact, according to many reports, the service is often used by people to send pictures of their, well, you know. If this seems like the good old days of the early internet gold rush, it is. Spiegel believes Facebook has undervalued his company and he wants more. Now, it's true that Groupon and Facebook also once turned down $1 billion offers, but not everyone makes the right call. Do you remember a company called Dig? Its founder turned down a $200 million offer only to eventually sell Dig for $500,000. So, for either having the cojones to want to build the company himself, or for having the hubris and gall to turn down a multi-billion-dollar offer, Evan Spiegel is our favorite person of the day. Do the crime, you got to do the time. The FBI on the hunt for several high-profile white-collar criminals when Arise Exchange comes back. The FBI is on the hunt for several notorious white-collar criminals still at large, including these three alleged perpetrators. Their crimes may have been committed without a weapon, but the trail of destruction and pain that it leaves is still very catastrophic for the victims, something our next guest knows all about. Walter Pavlo Jr. spent 2 years in federal prison for wire fraud and money laundering and now writes extensively about white-collar crime in the nation. He's also author of the book Stolen Without a Gun and a contributor to Forbes.com. Walter joins us now from Boston, Massachusetts. Good afternoon, Walt.
Hi, Andrew. How are you?
So I take it when you were in business school, you didn't set out to break the law, but how does someone like you basically start heading down the path where, maybe there's an ethical line you cross and then all of a sudden you're committing crimes?
Well, I write about this a lot, and I look at my own story, and basically it's to use the cliche, it's a slippery slope. Mm-hmm. You start, looking at something and thinking that you can, possibly get away with it. The intention at first isn't to hurt anyone. You don't have these, consequences that you see in the future. And, it's one of these things that just snowballs over time. So a lot of good people commit, very heinous acts, very bad, white collar crimes that send them to prison for a very long period of time.
Did you know you were committing crimes? Because I imagine because it's kind of a slippery slope that you keep convincing yourself this is not illegal. It's not the Bernie Madoff situation where, gosh, he knew he was committing crimes, but maybe like the Ken Lay of Enron, who really wasn't that aware of it, or so he claims. What do you think goes through the mind of most white-collar criminals in corporate America?
Well, I think that a lot of them get caught up in the moment of what's going on around them. What does the environment look like? And to be honest with you, the environment isn't. It's not like you're walking into a convenience store and robbing it. There's no guns. There's nice people around. The environment seems to be pretty nice, and so you tend to get lost in that environment. And there's a lot of rationalization that goes on, but you're definitely hitting on people's their blind spots, their weaknesses, and these things just go on and on. Even good people that are, otherwise are good in their life. This is just such a small part of their life that, it's even disguised from themselves.
And they feel like they're helping the company and they feel like they're keeping people employed. And most importantly, they have peers in many cases who tell them this is okay.
Well, yeah, it solves a problem. One of the things I lecture a lot to MBA schools, one of the things about white collar crime, for the most part, it does solve an issue, whether it's, masking, financial results or, even embezzling money that, somehow benefits you. It solves, problems in your lives that say, well, it must be okay. I'm feeling pretty good as a result of this. It can be somewhat intoxicating.
And we're not talking about the individual who sits at his home and basically steals people's money from the internet. When you're in a corporation, do you believe that corporate America has now set up the right values and ethics, especially after the Enron and the WorldComs?
Well, I think that they have. I think they certainly have come a long way in doing that. But I can tell you this: I don't have a shortage of stories to write about. There are plenty of people out there that still continue to cross the line. But Andrew, it goes back to your, some of your original thoughts, is that, people tend to get lost in the corporate environment as to, what is right and what is wrong. And that, even if I'm doing something wrong, that somehow I've rationalized in my mind that, man, this is the way that it's not really not hurting anybody, so it must be okay.
So how do people like you get caught? What is the first step of the downfall?
Right. For most white collar criminals, and you were talking earlier about fugitives that are on the run. First of all, most white collar criminals don't have the stomach that once they're they realize that they're in too deep, that the consequences are going to be huge. Really, their conscience does catch up with a number of them. Their lives are falling apart. They're not running down to the police station or the FBI and say turning themselves in. But their lives are certainly upside down with the pressure associated with, just being involved or trying to undo what they've done. Many criminals, by the time that they're caught, they've stopped doing the act. They're rarely caught in the act. They're just, suffering the consequences of how do I get out of this mess?
And in the last 30 seconds, tell us what federal prison is like. Is it the country club atmosphere that sometimes people talk about?
Well, I actually wrote a story recently because they were talking like this guy, Raj Rajaratnam, and Insider Trading is living a life with a butler and all this other stuff in prison. Nothing could be further from the truth. Prison camps are difficult places to live. Look, they're not the Russian gulag or anything like that, but you're separated from your family. You're certainly not, the
you're humiliated.
Are tight.
You're loss of freedom. You're humiliated.
Exactly. Doesn't get any worse than that.
Okay. Well, thank you so much. Walt Pavlo, author and speaker, joining us here on Arise Exchange. We'll talk to you again soon. Thank you.
All right.
Tomorrow on the Rise Exchange, we kick off our small business spotlight, profiling companies that are staying up in a down economy. And we continue our alternative investment series, taking a look at some of the out-of-the-box assets that could lead to bigger returns on your investments. Let's take a look at how the markets closed. The markets really like what they heard from Janet Yellen today, that the money is going to continue. The Dow up 54 points, the S&P 500 up 8. That is another record. We'll see you again tomorrow on a Rise Exchange. I'm Andrew Schmartz.